Hello and welcome. You're watching Markets Today. I'm Akshi Batra, and this is where we discuss everything about the stock market's action the whole day, how it panned out in trade, where were the gains and losses seen, and what really happened to your investments. What started off as a manic Monday did end with a lot of mayhem on the street, a bloodbath on the street, because all across the street we actually saw a sea of red really emerge. In fact, the markets, the benchmarks, the broader markets, the Nifty Bank, you name it, and you've seen all sectors and stocks really seeing sharp cuts in trade today. In fact, what opened as a 2% gap down in trade extended to a 3% fall for the markets, the Sensex and the Nifty. The rupee hitting lifetime lows, as well as inflation numbers are still awaited at 5:30 p.m. Global markets also plunged over fears of aggressive policy rate hikes coming in post the US inflation coming in at 8.6%, which is a 40-year high too. Apart from this, the Indian rupee, like I said, 78.28, a record low for the rupee against the dollar was seen. That actually led with the benchmark 10-year bond yield rising or hitting 7.6%, its highest since February 28 of 2019. What do the experts really say about the kind of market mayhem that we've seen today? Vinod Nair of Geojit Financial Services said that the correction in global markets is definitely a double whammy for the markets in India, because we've seen the upcoming policy rate hikes and the cuts due to the central bank's balance sheet, all of that impacting the sentiment. Also, he said that higher than expected US inflation data definitely added fuel to the already wrecked market, which was factoring in a 50 basis points hike in the Fed rates. Now, the weakening rupee, the persistent FII selling, along with the anticipated elevation of the domestic CPI numbers, are gripping the domestic markets in fear. What he also said that he will continue to trade with high volatility, and the markets may continue to trade with high volatility. However, medium to long term risk takers should start to chip in into the market, because this could be the last phases of the consolidation, is what he really mentioned in today's market outcome or the commentary. Of course, all the sectors bled in trade today. IT emerged as the worst performing index, down by 4% in trade today. Talk about the financial services, that was down 3%. Nifty Bank down 3% at 33,405 as the closing level for that index. Pharma was down almost 2%. Realty down 3%. 4% almost down for the media index as well. Very sharp declines coming in for the metal stocks as well. 3.8% downtake. All sectors really, looking at sharp declines. Now, as far as the Sensex heat map is indicated, the 30 stocks out of those 29 stocks ended in the red, with Nestle just inching higher by 0.5% in trade today. So the top losers definitely Bajaj Finserv, Bajaj Finance tanking about 7% in trade today. IndusInd Bank down 5%. Tech Mahindra, ICICI Bank, TCS, all of them down by over 4%. NTPC, SBI, Infosys, L&T, Ultratech Cement, Kotak Bank, all of these stocks really taking big beating in today's trading session. Talk about the Sensex that ended with a 1457 points cut, as the global stocks also ended lower. The Nifty also settled below the 15,800 mark too. What else did the most of the experts believed in today's trading session was also, say for example, we also heard from Pankaj Pandey, who's the head of research at ICICI Direct. He said that on the equity market outlook, he believes that volatility may remain in the near term. The recent trough, however, gives opportunity to the long-term investors to load up on the quality companies with sustainable growth visibility on the medium term. However, he remained constructive on the domestic consumption, capital goods, and the allied spaces in the markets today also. Now, Rahul Chau is the co-head of research at Equity Master, definitely said that no one knows where the bottom is for the markets, as that is the biggest question as to how much more downfall can we see for the markets going forward from here. He does believe that when you see the research, the Sensex PE multiple has fallen below 20x when the market starts to look very attractive from a near 2 to 3 years time frame. So right now, Sensex is trading at a PE multiple of 22x. So he's just waiting for that 20x. So very, very close to that 20x level is where he sees the markets to become very attractive from here on as well. Another point to note here was that the cryptocurrency market also crashed in trade today, the lowest in last 18 months, $25,000 and below that for the Bitcoin. That led to the cryptocurrency market crashing below the market value of $1 trillion. So that's something that also was important to track in the markets today. Overall speaking, most of the experts are keeping an close eye on how the inflation numbers will come out in the evening, thereby thereby indicating what course of action will the central bank back home will definitely take on that front too. With that, I wrap up right here, but do stay tuned on to Business Today TV to catch all the updates of stock markets and cryptocurrencies and from the world of business right here on Business Today TV.